Hi, welcome. It's Mary Ellen McGonagle here with your weekly Edge show for Friday, January 19th. Today, we are going to take a look at the broader markets. The S&P 500 did close the week at a record high, and we also did experience a very nice rally in the NASDAQ. We're also going to look at some of those headline news, data, and other items that did drive price action last week. It was a generally bullish period, however, very focused as far as the areas that truly outperformed. Last up, viewer question of the week, and that question is all about how to trade stocks after they experience a large gap up in price. So we'll take a look at a couple of examples there. As for news last week, we did get pretty strong data by way of retail sales numbers for December. They did jump. And then later in the week, consumer sentiment also jumped. Consumer spending is 2/3 of GDP. And this strong data did imply that the economy is remaining quite constructive, which in turn is keeping interest rates elevated. We'll take a look at the yield on that 10-year as rising or certainly higher interest rates will oftentimes not be a good backdrop for growth stocks. So in that sense, we did see the yield on that 10-year Treasury climb to 4.1%. as investor confidence in a possible cut of interest rates in March by the Fed did decline. We also got data relating to home builders, and their confidence also jumped in January due to continued high demand. In turn, we did see a bit of a rally in those housing stocks. We'll talk about that. And then also news globally. China did report their GDP numbers, and it did show the slowest growth going all the way back to 1976. Next week, I talked about Q4 GDP data being due. Also, we are going to be getting some critical inflation data by way of that core PCE. We've seen inflation data move the markets in the past, so this will be a very closely watched report. So from here, let's go ahead and take a look at where the markets closed for the week. And here we are with the daily price chart of the S&P 500. I mentioned that this index did hit a new high in price, which is another confirming factor for the uptrend that's currently in place for the S&P 500. You can see that we had that gap up today into a 1-month base breakout. We also have positive momentum by way of this MACD and RSI. So we are remaining in an uptrend. From here, let's go ahead and take a look at the NASDAQ composite, which outperformed the S&P 500 with a 2.2% gain relative to that S&P that was up 1.1%. And we can see that the NASDAQ also experienced bullish price action with this nice double bottom formation gap up to a new near-term high. We are also seeing this MACD black line up through the red. That is a bullish crossover that often indicates a new uptrend. And then we also have that RSI in positive territory and trending higher. So from here, we'll want to take a look beneath the surface of the markets. I'm going to share with you a view of the 11 sectors in the S&P 500. I've added an RSI indicator and sorted them in descending order. So what we can see up here are your stronger sectors on this upper left quartile, and then weaker sectors down here below. First up is technology. Had an excellent week. It was up 4.1%. I'll share with you where that outperformance took shape. Also, we can see that MACD crossover signaling and confirming a new uptrend in the technology sector. And also, we can see nice high volume characteristics as this index advanced. Next up here is communication services. It did outperform a bit more modestly, up 1.3%, but also experiencing a gap up into an uptrend, all about Alphabet and Meta platforms, on average performing about 2.3%. So from here, we do want to also take a look at some of these other areas because in essence, only two sectors, the two that we just reviewed, outperformed. All of the other sectors underperformed. Next up, we can take a look at financials. They were up almost 1%. They began the week on a very weak note due to earnings. However, a late week rally did push this financial sector back above these shorter term moving averages. Your momentum never got negative. So this is of note simply because your biggest moving areas and those that certainly came close to outperforming were those that reported earnings. Underlying companies in that sector came out with strong numbers, and we did see that in select financial names. Also up here at the forefront, despite being down for the week, is healthcare, XLV, and we can see a nice orderly pullback to this 21-day simple moving average. Your momentum's still up here in positive territory. And likewise with your MACD, certainly do a pullback given this sharp advance from November into the beginning of this year. It's still an area that I favor. We have a couple of names on my MEM Edge report that have outperformed last week and others that are setting up quite nicely. Moving through these sectors as well, of course, you will want to be aware of areas on the move, potentially higher. This is the consumer discretionary, and the group did experience a late week rally after a pullback to this 50-day simple moving average. You can see it's poised to move higher with this positive RSI. If we can get a MACD crossover confirming, that would be constructive. However, in our next segment, I will share with you that S&P retail ETF, and it's not particularly healthy looking, but there are some names here that are shaping up quite nicely. I'll share one of them with you as we move through. Also, we do want to be aware that energy and utilities both down over 3%. Likewise with real estate, we can see that that group was down 2.2%. So net, not all areas showing outperformance or strength. There were areas of weakness, basic materials down 1.5%. You do want to, of course, focus on those areas that are exhibiting upside price momentum so that you can participate in that. And then from here, I'm going to share with you a view beneath these sectors so that you can uncover precisely where that strength is taking place. So with the ETFs here, same view, 2-month daily price chart with that RSI up here at the forefront. Semiconductors up 7.8%. We can see this big move higher. A lot of the gain taking place today, up 4%. SOXX is the ETF. High volume, and take a look, MACD black line up through the red. Certainly stretched at this point, but we're not quite yet into overbought territory here. I will share with you a couple of the names, and certainly the one name that really sparked this industry group higher. Next up, taking a look at another strong area in technology, and it is software, IGV, up 2.5%. Another area that experienced a base breakout with a MACD crossover, indicating a new uptrend. Outperformance here took place. Microsoft certainly up 2.5% among those outperformers. Also, you do want to be aware of some of these areas that exhibited weakness. And I talked about retail. Despite those strong retail numbers, this is XRT. It was down about less than 0.5%, and it is in the throes of potentially trying to reverse this downtrend. The group, again, similar to healthcare, was certainly due a pullback after this November into the latter part of December sharp advance. So I am keeping my eye on this, because if we can get that black line up through the red, signaling a new uptrend, we could in fact see a nice downtrend reversal shape up here. Again, there were bright spots in retail, however, and I will share some of the names in that area. Also, XHB, I talked about interest rates trending a bit higher. However, strong data by way of home builder confidence did keep this group very much in an uptrend with a positive RSI above 50. Likewise, a move that had been really extensive November into December, do a bit of a pullback, and in this case, consolidation. I'll share with you a company in this home builder space that's due to report earnings next week that is setting up quite nicely going into their report. Let's go ahead and do that right now. And we're looking at a daily price chart of DR Horton, DHI. It did experience a sharp gain following earnings, their last quarterly report. Let's go ahead and mark this chart up because since then it has been experiencing a very tight trading range, period of consolidation, back and fill. And again, they are due to report next week. We will be on the lookout, certainly for their results, but if we can break above this high here earlier this year, we could see easily another leg higher for DHI. I talked about other areas that are picking up within retail. I did want to share with you a stock that broke out of a base today. This is Skechers SKX, of course, a footwear company, and I did want to mark this up and highlight this base breakout that took place. This is a saucer formation, and what you'll see is that today's move did push the stock higher above this prior high. We have positive momentum with that RSI, and then that MACD just on the cusp of putting forward a MACD black line up through the red bullish crossover, which would confirm the new uptrend that's shaping up in SKX. From here, viewer question of the week, and I talked about semiconductors, and one of the primary drivers was a strong earnings report from Taiwan Semi, TSM. In response, we can see this big gap up, super high volume. I'm going to go ahead and mark this chart up because when you see this type of price action coming out of earnings, when a stock does print a big gap up on heavy volume, oftentimes you will see a continued uptrend, and we did see a nice rally today, up 1%. Here's that high volume, and then that MACD crossover signaling a new uptrend. So from here, I'm going to take us to an intraday chart. From here, we can talk about possible entry points. I'll share with you another stock that is on the move and how you can really pinpoint possible entry points. This is TSM on the 15-minute price chart, and I'll go ahead and highlight a couple of items that took place on Thursday's open after the release of their report. Here's that large gap up that took place, and oftentimes, in particular, if companies report overnight and you hear that the number is quite good, you may be tempted to put in an order so that you buy at the open. Now, oftentimes these names after these big gaps up will pull back slightly and present you with another opportunity to enter. And in this case, when TSM moved back above this 5 and 13 simple moving average on that 15-minute, that would in fact be an entry point. From here, let's go ahead and take a look at another semiconductor stock that had a nice move higher. This is a daily price chart of Marvell Technology, MRVL, another stock that experienced a gap up into an uptrend. And I'll go ahead and mark this up because we also did experience nice high volume characteristics on that gap up. So this did take shape on Thursday. From here, let's go ahead and dive into an intraday chart of MRVL. We'll take a look at a 15-minute, and here we are with Thursday's gap up, and it did pull back into the close, again using that 5 and 13 simple moving average on your intraday chart. As the stock moved back above this shorter term, these moving As the stock moved back above these moving averages, that would be an ideal entry point. You can see that your momentum stayed positive during this pullback period, and the stock has continued. In fact, it was up 4% today. That's it for this week's show. Everyone, I hope you have a fantastic weekend. I'll look for you here again next Friday.